and welcome to Sibos 2018 in Sydney. I'm Hannah Wallace, and with me now is Bob Graham of Virtusa, and we're talking about open banking and payments transformation. Hello Bob, thank you for joining me.
Thanks Hannah, nice to be here.
So to start off with, could you highlight what are the main drivers for open banking?
Yeah, so first of all, the payments arena is a really exciting time to be working in. Today we have things like real-time payments, we have mobile wallets, we have initiatives like Swift GPI, we have Visa announcing B2B Connect, and of course we have open banking to look at. The open banking say trend, we see three factors driving it. One is certainly regulatory change, where governments or regional entities are requiring banks to open up data and access. Best known example of that would be PSD2 in Europe. Then we see customer demand driving banks to provide specific services or capabilities. We've seen several examples of that in the US with some of the major tier 1 banks providing transaction banking access to large corporate clients. And then last would certainly be fintechs or tech fins who are innovating and driving products and working either collaboratively with banks or forcing banks to open up some access.
All right, and following on from that then, what is the role of fintechs within open banking?
Yeah, great question. So traditionally fintechs have either been bundling disaggregated services from banks in a better way that banks had done and providing them cheaper, better user experience and from a product standpoint, or actually disaggregating services that are complex and focusing, say, on one service and doing it much better than a bank could do. So from that standpoint, what you really have to look at is who's controlling the customer relationship. And what we see now is in certain circumstances, the banks are working with fintechs to aggregate or collaborate with them on some of their function and features, and the bank exposes that directly to their client. And in some circumstances, actually, banks are even acquiring fintechs to gain competitive advantage. That could be seen by JP Morgan Chase's acquisition of Bill.com or BBVA acquiring OpenPay, as examples. But on the other side, what you see are some fintechs, or in some circumstances actually the tech fins, like an Apple, changing the marketplace by them controlling the customer experience, coming out with a unique product, and then pulling the banks along and forcing them to provide data and access into the system.
All right, and are you seeing an adoption globally, or are there differences between the regions?
Yeah, so first of all, open banking is still in a very nascent stage globally. And as I mentioned earlier, if you look at some regions, regulatory change is driving that. So we have PSD2 in Europe. We have regulatory bodies in Singapore with MAS, Hong Kong, and even here in Australia coming out with regulations and timelines for which banks need to comply. Then we have other regions of the world that are taking a much more measured approach. Most notably, I would say, are the United States, for which hasn't made any indication that, from a regulatory standpoint, they're going to move there, and will probably let open market dictate how far and fast they go. And Canada, although they've recently formed an advisory committee to provide non-binding recommendations into the marketplace. So I think what would be really interesting to see is as the regulatory changes happen over the next year and the success or the adoption of that, how the other regions that are sitting on the sidelines or observing what changes they might do. And when we're sitting here in Sibos 2019 London, perhaps we'll have more interesting updates.
Yes, well, I'll see you there.
Absolutely.
Bob, thank you very much.
Thank you, Hannah.
And thank you for watching.